Hi, it's Nishi. Hope you're having a really good day. And in today's video, what I want to talk about is the main differences between buying a company car and leasing one. There's really three parts to this video, so I'll go straight into it. So let's talk about what the difference is, firstly, in terms of how you pay for the vehicle. When you buy a vehicle, you're essentially paying for it all up front, but what you might end up doing is also getting something called a hire purchase agreement or lease. And what happens there is essentially you become the owner of that vehicle, and then over time, but you also at the same time get a loan attached to that vehicle, and over time you pay off that loan and then you become the owner of that vehicle. Usually when you've got a hire purchase agreement, you tend not to have a balloon payment at the end, although there might be a small admin charge at the end of that lease. And that small admin charge, it then releases you from the contract and you become the owner of the vehicle. It's really important to understand when you are essentially in a hire purchase or a purchase scenario, because the tax treatment's very different. But a lot of people selling cars, they often get the terms mixed up, and they might call a hire purchase a lease, but it's not really. It is essentially you buying it with the loan attached. The other side of it is you could actually get what you call a PCP and lease the car. And the way to look at leasing the car through a PCP is essentially it is renting the vehicle. You're renting it for an agreed period of time. Usually you can't leave the agreement without punitive charges. And then at the end of that agreement, the vehicle goes back to the lease company, but they might make you an offer and say, well, if you want to buy it, you've got to pay for the actual value of the vehicle at the point of the end of the contract. So that's very different from actually the hire purchase or buying it outright, because even once you finished your lease or your rental, you would then still need to pay them quite a lot of money to then take ownership of the car. So the car is never really yours. So it's really important, but the tax treatment's different, because like PCP, you pay for it monthly, and essentially you are renting it, so it's going out of your bank account as a payment every month, much like the loan repayments would be on the other side, but these are treated as a business expense every single month, and you get a tax relief on that business expense every month. When you buy that vehicle outright, then ultimately what you're doing is you're putting an asset on your balance sheet, and you are then putting a loan against the asset on the balance sheet. And when you're repaying that loan, the entire loan repayment every month isn't tax deductible. It's only the interest on it. But when you buy that vehicle up front, you can actually, in scenarios, not always, but certain vehicles, for example, like an electric car you bought that was brand new, you can actually put it through your accounts like in the first year. So what that means is you can get all this tax relief on your corporation tax up front. The downside of that is if you do sell the vehicle later on, then you've got to pay corporation tax on the sales proceeds or sales profits. So a lot of this comes down to the timing difference between how the corporation tax relief works. When you lease that vehicle or rent it, you're getting that tax relief gradually over a period of time, whereas when you buy it outright, and depending on if it's an electric vehicle, you might get all of it up front. But if it's a different kind of vehicle and you can't claim all of that tax relief up front in what we call the annual investment allowance, you may be able to depreciate it at a certain rate. HMRC give you whether that's 18% or different rate, depending on the nature of the vehicle. So these are two main differences. It's a lot of it's the timing of the tax relief, but then the second difference really comes down to VAT. So when you lease or rent a vehicle, you can claim half that VAT back every single month that you're paying. The HMRC only let you claim half the VAT back because they say, well, the other half is blocked because you get personal use of that vehicle. Obviously, if it was a pool car or a car that didn't have any personal use on it, or a van that didn't have any personal use on it, you'd be able to reclaim all of that VAT. But let's say it's a vehicle with personal use, so you can't reclaim any. But the other side of that is if you went and bought that vehicle outright, if there was any personal use on that vehicle, because it was a company car, you wouldn't be able to reclaim any of the VAT. So there is a bit of a difference there, actually. In one hand, you can reclaim some VAT, even though it's only half, and the other side, you can't reclaim any of the VAT. So what I've really described here is the two main differences where it comes to corporation tax and VAT between buying or leasing a vehicle. Everything else is kind of the same really, because in terms of benefit in kind and paying company car tax on them, there's no difference between the two. But one thing to really remember here is I've come across many situations where it's, even though the person buying the vehicle can't reclaim the VAT, it still makes sense to buy the vehicle outright or get it a hire purchase, because quite often people are offering a better deal or a better rate on buying that vehicle outright than if they were to lease it. And then if you looked at it over a period of time and how much money was actually going to be paid, sometimes it makes sense to sacrifice that VAT to get that discount up front. And quite often, especially in businesses where you want that tax saving up front and it's an electric car, then actually that can that tax saving up front, even though it catches up with you later, that can be really good for your cash flows and various other things going on as well. So those are the main differences. If you want to talk about it specifically for your own business, it's definitely worth reaching out to me, and I'll see you at the next video.